Hello, 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 good evening. I want to go ahead and get started and just say welcome. It's so good to see you guys. I feel like I haven't seen y'all in so long, although I know we had the meeting in between the meetings, so I did see some of you, and I appreciate those of you that did get on. That was really great. Let me, my co-chair and our Madam President, Adrienne, will not be joining us tonight. She actually is on a flight. So you will be hearing from me all night long, and hopefully you will not tire of me this evening. But welcome. I'm gonna go ahead and share. Let me kick off by showing you all the agenda that I thought I had up somewhere. Let me try to pull it up while we are waiting. Is Justine on the call by chance? I didn't see if Justine actually was joining us tonight. I should have asked her earlier to see if she wanted to join for the presentations, to hear and see the presentations this evening on cryptocurrencies. So so Justine, if you can hear me and if you are able to join us, we would love to have you obviously listen in on our presentations this evening. Okay, so let me share the agenda for tonight and get out of that. And okay, here we go. All right, so this is the agenda for this evening. We're going to go ahead and review our investment tracker. I know there's some teams that still have not updated, and we'll get together afterwards to work on updating the investment tracker. But I wanted to make sure that you all have transparency on what the performance is looking like with, you know, as a team or as a whole investment club, and then those teams that are leading the way in certain areas and certain asset classes. Then we'll go ahead, if we have, you know, all the different teams join us, is to go ahead and start our presentations for those teams that are presenting on their cryptocurrency investments. And then we're going to take it back to the basics, right? We're going to go back to where we should have started and kicked off in September, and just really drilling down on understanding stocks in a much bigger way, but then drilling down on certain aspects and doing a deeper dive on investing in stocks. And obviously I want to hear from you all if there are any questions about anything. I do want to let you know that we do have, we're going to do another special session in between this meeting and the next investment club meeting. That's going to be in April. So for anyone that needs, you know, maybe some extra encouragement, has some additional questions on some things that maybe, you know, aren't totally, the dots that aren't totally connecting, we're going to go ahead and we're going to be available in April to do that. And then our last session for this season is going to be May 18th. And we want to, you know, celebrate our achievements and our learnings for this entire year. So we're going to do that on the May 18th meeting, okay? In addition to our presentations for what we're going to do tonight. So with that, let me go ahead and share our performance report. So give me 1 second while I pull that up. And here we go, here we go. Jennifer. All right, so let's take a look at what we're doing and what this investment work we've been doing in the last, you know, several months in September. What does it look like so far? So let's see. Can you guys can see the screen? Yes. Okay, good. All right, so kicking it off with our stock portfolio performance, you guys, so actually before I kick that off, many of you know, if you've been watching the news or listening to the news in any, you know, way, shape or form, that everything pretty much across the board is down with the exception of a couple of things. One is the energy sector. Obviously, you guys have seen gas prices. So that has contributed to the energy sector being one of the asset classes, or one of the, you know, industries that are actually positive. Some consumer goods and consumer staple companies are actually doing well too. And then some crypto's doing well, you know, and we can talk about that later on. But in terms of our stock portfolio overall, cumulatively with all of our investments, our stock portfolio is down almost 6%. We are actually doing better than the overall market. You know, the overall market is down a lot more than that. So that's where we are right now. But let's talk about who's leading the way. So in third place, and this is actually going to be kind of funny, is Queen Builders, which was formerly the Legacy Builders, part of the team. They are in third place with their T-Mobile investment that currently has, from the time we began the investment club, a 4.23% return. In second place are the Queen Builders, again, the part that was the stock queens with their Apple investment. That Apple investment is up almost 26% since the time of investment. And then there can only be one number one. And that number one in the stock portfolio, actually that team doesn't even exist, although there are a couple of team members that got placed into other teams, but that is with the Exxon Mobil investment in the energy sector, having an almost 42% return, and that was blessed beyond measure. So Kimberly, if you can hear me, great job, okay? And so next, let's talk about our mutual fund portfolio. Again, down 9% overall. Leading the way is really interesting. I really want to talk to you guys, go get hers, because I know that your portfolio is up, but I could not find pricing that I could access. So I want to talk to you guys about that, because I want to see what I'm doing, because I couldn't figure out where to get pricing. Although I could see that it was up, I just couldn't get the actual numbers, okay? So we'll talk about that. Next is our mortgage-backed security portfolio. That is also down, surprisingly, because housing is up, but it's also based on, you know, payments. So the mortgage-backed securities, you know, are also based on how homeowners and commercial, you know, owners of commercial real estate are actually paying on their investments or on their properties. And so that's a lot of that is based on that, even though overall the housing market is up, but we're down 7.5% almost. No winners there because everything was down based on our investments. And lastly, talking about our crypto performance, this is not including, I think there was a total of 2, maybe 3 teams that have still not reported, but based on the info that we have, that is slightly down, about 3.5%, but the Spellman blue chicks are actually up for the pure crypto investment into Bitcoin, okay? So that is the return of 0.62% return. And I just wanted to at least start off with that so we could all see where we stand, okay? So yes, give yourselves a hand, because we are actually doing better than the market. So that is something to celebrate too, okay? All right, are there any questions about any of that anyone has? No? Okay. Yes, I am going to share, so everything that we have that I present tonight, I will share with you guys so that you have access to all of that, okay? All right, so I want to go ahead and move on to the presentation section and go get hers. Are you guys ready to present for tonight? Are you guys set and ready?
If we must.
Jennifer, we're not making eye contact with you.
I was going to say, can you pull the names out of a hat?
Listen, we pulled names out of a hat earlier in the week, and just so you all know, who's on tap to present for tonight is Go Get Hers, Team Square One, and then True Blue Novices. So we'll let you guys decide in what order you want to go. But those are the teams that were pulled out of a hat to present for this evening.
My team can go first to give the other team a minute to get some water and catch their breath.
Okay. Hey, I love it. Let's go.
All right, this is Kirsten and Leah, Lauren, I heard you, so I'm going to share screen now. You all let me know if you can see everything and then I'll go on mute.
Thank you so much, sis. I want to start off by saying greetings. Thank you so much for this fellowship, for our teacher and our presenter. Thank you, Jennifer, for consistently providing leadership to us in this area. Just to give you all some contextual information before our PowerPoint uploads, we're all beginner investors. And so we are very excited to present what we've learned this past month in the realm of crypto. So I just want to kick off the call by saying greetings, and I hope everybody has had a good week so far. My name is Lauren Akil Juzang, and I will be presenting on behalf of Square One. And our topic that was rendered to us was cryptocurrency. And we're excited to go a little further in our presentation.
Okay, can you all see my screen?
Yes.
All right, hit it.
And we have our other sisters on the previous slide that are part of our group, but for the sake of time, we want to go ahead and deep dive into our presentation. So in terms of cryptocurrency, our group started the evaluation process by first looking at Yahoo Finance. We're going to the previous slide, sis. And within the Yahoo Finance space, they communicated that Bitcoin has become the most revolutionary investment of all time. This was documented, as well as some sources from MSNBC that state that this is the new it. And by it has produced more billionaires overnight than any other investment. We've been following market trends of other seasoned investors, which we'll get to a little later in our presentation, of what they're doing and how they're investing in the crypto space. And when we met initially in terms of our group, we considered Ethereum, we considered Terra, we considered some other platforms, but Bitcoin was very easy. It was very easy to understand. The platform was simple to buy via Cash App. And so we explored those nuances, as well as Shiba Inu and Cardano. We were very interested in those. But for the sake of our group, and I don't know about anybody else, we're looking for things that have a track record of success because our risk tolerance is very low. So with Shiba Inu and Cardano, the risk tolerance is a little bit high. And that was something that our group really wasn't prepared this time to undertake. Next slide, please. So here on this particular graph, we can see where Bitcoin is and how it has been poised for success since April of 2021. And we see how Cardano is in fact going, but these numbers can be a little bit misleading. And what I mean by misleading is that the numbers are actually inverted. So even though Cardano and Ethereum appears as though it's higher, right? There's more risk involved with that since last year. And Bitcoin has proven that it must go low and crash before it goes back high again. So the lower the numbers are on this particular graph, the better success ratio you will have as an investor. Next slide, please. So Bitcoin versus Ethereum, how we, selected Bitcoin at this particular time. And that isn't to say that we won't invest in Ethereum at a later time. But Bitcoin's network in and of itself, from the investors that are speaking in reference to it, to the YouTubers, to the influencers, it's a mainstream cryptocurrency. Bitcoin also has had a hard cap of 21 million coins. So once those coins have been extended and bought, lending itself more to the argument that, once you get in, you basically have fit in, right? It's easy to purchase via Cash App, and it's decentralized with low transaction fees. It has the absence of government regulations at this particular time, but we're going to speak more about that a little bit in our presentation. And it's stored on a digital ledger. It's also a part of the blockchain technology, which we've discussed in previous meetings. And Ethereum. Okay, Ethereum is the second most valuable cryptocurrency. It's regarded as the silver to Bitcoin's gold metaphor. It's a lack of censorship, and it plans to automate many processes that still require intermediaries, such as using an app store, working with fund managers. Ethereum is also used more as a way to interact with the network and a way to transfer money. And we saw that with the Ukrainian refugees, we saw that they were giving out cryptocurrency for individuals that were trying to escape, and that was very that was a very nuanced, impactful subject matter for our group to explore. And Ethereum is based on tokens and technology that are technically inoperable. So it was an easy choice for us to go ahead and make the investment with Bitcoin. Next slide, please. So why in essence, right? What are the stone cold facts? Well, I'm glad you asked. We invested again because it's the next goal. It's the highly speculative generator. Okay. High risk, high reward. It's made several billionaires. You follow the trend. Okay. It has a loyal following of retail investors as well as CEOs, CFOs, and people that have been in the industry for decades. It's increased institutional investors. So banks are getting involved. Wall Street is getting involved. The top 10 lenders are getting involved. And it's the future, according to Michael Saylor, the CEO of MicroStrategy. There's a hedge against inflation. We know that the dollar can only stretch as much as it's used. In considering our present day economy, these are great alternatives for the cusp of a win-win scenario. Next slide, please. So then our group sat and did a SWOT analysis, and we talked about some of the weaknesses, the opportunities, and the threats, as well as the strengths, by focusing and hounding in on Bitcoin. And the cryptocurrency can't be traced or stolen. That was a strength. And we're living in a day and age of identity theft, phone recognition, and so many other things. With new technology, it presents a lot of uncertainty and insecurity in that space. And so we like the fact that our identities could not be stolen and our money couldn't be stolen. Some of the weaknesses is that there's a crippling slow transaction and accessibility loss. So meaning the slow transactions of, when is this going to be on a global stage? We're still using cash, we're still using cards, but there's a slow transaction and there's an accessibility loss. Everybody does not have the opportunity, the wherewithal, nor the knowledge to get involved in crypto, and to be involved and to learn these market trends and the opportunities. There's safety around data breaches. We're living in a day and age where there's constant threats. I mean, Wells Fargo recently published an article stating that some of their top tier financial contributors paperwork has been released. There are other banks that have stated that even credit unions, that individuals' credit scores have been released to foreign countries. And so this information can be very sensitive culturally, as well as a time appropriation in times of war and what's going on amidst the pandemic. So some of the other threats was that the governments and the banks could possibly come in and create sanctions and create laws and opportunities that make it hard. So this is a space where, because it's a gray area at this particular juncture, our team is poised to navigate these waters because it's accessible at this present moment. Next slide, please. This graph simply shows where Bitcoin is positioned in the market and how over time it has developed. What are some of the ticks and the upswings from year 1 to year 5, what the maximum could possibly be, where we're posed in terms of the supply and the volume cumulatively to make an enhanced decision. Next slide, please. The volatility. So the fact that it's moving, the fact that it has some type of cadence and rhythm is also something that our group is looking at in terms of our SWOT, in terms of our analysis, in terms of us being a beginner investing group. We want to make sure that there's movement along this space. Next slide, please. This particular graph shows Bitcoin's trends over 4 years. So as we see, there's been a peak. There's been a peak and a decline. There's been shifts. There's been crashes, and Bitcoin crashes roughly once per quarter. So knowing that information gives us a sense of safety where we're not constantly checking our phone, where we're not going to be mad and upset or start crying if it takes a downswing, but rather we welcome that downswing. Sometimes people run from the storm, but our group's motto was let's run into the storm if we know the storm is in fact going to produce avalanches of money abundance. Next slide, please. Bitcoin is globally positioned to be stable. Why is Bitcoin so volatile? So here we have some sources that speak to the volatility of Bitcoin from a holistic standpoint. What is the impact of Ukraine conflict on crypto? Not just Ukraine. This particular article in a nutshell, if you all have time, simply puts it out there that as countries continue to be at war, that's going to affect the economy. That's going to destabilize jobs. That's going to demoralize the healthcare system, put a strain on healthcare workers. We know all of this. So knowing all of this, we're positioned in a space where we have the wisdom and the wherewithal to make informed decisions. In this particular article, it speaks to the fact that individuals who were refugees were given funds to actually go elsewhere and try to create a life. And after raising almost 47 million through donations in Bitcoin and other cryptocurrencies, the Ukraine announced previously last Wednesday that it will reward those who have helped fund the country's war against Russia invasion through promotional airdrop. And so not only the individuals who are refugees, but the individuals who are stepping up and saying, I want to be a part of making a difference, they're being rewarded with cryptocurrency. So we're seeing that it's already a form of currency that's in the works overseas. Next slide, please. Don't take our word for it. Please continue to do your research. We found some really insightful articles that kind of made us assured and gave us the wisdom to adopt Bitcoin is something we want to continue to invest in, even after this module of cryptocurrency is over with. Adoption of scarcity to fuel a Bitcoin run to 10 to 100,000 dollars, a report was generated. And so Bitcoin and blockchain portfolio update, we have several links here, and I'm sure we can share this, but these articles really just speak to the fact that the money is doubling. There's going to be an adoption of Bitcoin at a particular time. If America goes into another war with another country, probably the American dollar will be destabilized and a crypto will take over, simply put. And they're already predicting these metrics. Next slide, please. But again, don't take our word for it. The White House white papers have concluded that the United States leadership is a global financial system, and technological and economic competitiveness, including through the responsible parties developed of payment, of innovation and digital assets. This came directly from our Commander-in-Chief, President Joe Biden. The federal government sees cryptocurrency as a legitimate, serious, and important part of the economy. It sees ways to integrate it through our society in the next 20 years. It's starting the process of creating regulations in digital currencies and have formed communities as well as coalitions to solidify the government's plan to explore some of the crypto's most contentious issues. So they're meeting to discuss the ramifications of crypto and how to safeguard and come up with laws and sanctions. The Treasury Department is now in the works of coming up with ideas for ways to protect investors as well as consumers and financial risks that are associated with crypto. So it's making it a space that's welcoming investors at this particular time. And the Commerce Department is navigating how cryptocurrencies might boost the United States competitiveness in the global market, in the global economy. We have to position ourselves where our children are going to be in a better position than we are. And at this particular time, with so much going on amidst the pandemic, it could easily be deduced that the American dollar can be destabilized at any point in time, especially if we go into another major health crisis or war. The Attorney General and the Secretary of Treasury, the Department of Homeland Security, is now coming up with innovative strategies in national communities to combat crimes facilitated within cryptocurrency. So that's going to create jobs, that's going to create outputs, continued metrics that we can study to really, really be wise in this space. And finally, the Financial Stability Oversight Council is being established, which is a government organization that studies the United States financial system and will evaluate what kinds of threats that crypto poses to the overall economy. So they have individuals that are studying this, that are getting paid more than a living wage to make sure that this is a safeguarded space for us to invest in. And they're putting all these in place so that people can invest and, in fact, generate revenue and make money. Simply put, this concludes our presentation. Again, thank you all for your time and attention.
All right, y'all just like came out of the gate. I love it. This is awesome. Really, really, I appreciate, man, the work that you guys did to just really come on back. So thank you, Lauren. I do want to open it up if any of you all, in terms of the other teams, have any questions about any of the presentations tonight. I want to open it up to make sure that you guys can ask. Hold on one second. Sorry. Lauren, can you talk a little bit about one of the questions that I had was, because you had it in your presentation where Bitcoin was at an all-time high and then it crashed. What were some of the things that led to that crash the early part of this year? And then you've also alluded to why there's been a rally in cryptocurrency right now, really, since we saw the war with Ukraine start. So if you can just talk a little bit about what sort of led to the crash, and then maybe, or even anyone on your team that wants to tackle that. And then, what's sort of leading the way on this rally that we're having in crypto.
Yeah, absolutely. I'll speak for the team, and if anyone wants to add to, please feel free to interrupt me. Well, some factors that led to the crash initially was that everybody was buying Bitcoin at one particular time. I remember about 2 years ago, and it got so inflated, right? And then we had all of this stuff politically, if everyone remembers, with Trump, okay, telling people to drink bleach, telling people, the virus was going to cure itself. With all of that being said, you're investing in something, but there are national concerns. There was a national climate around investing, which made people absorb into a fear culture, and they didn't want to invest anymore. Simply put, it crashed because the United States wasn't in a stable space to invest anymore. The cryptocurrency was seen as something that was a hoax. It was seen as something you're not going to get any money off of. They don't have any laws. What is this, right? It can't be tracked through Wall Street. You don't have a brokerage firm. But in fact, it made more millionaires than any other entity of investing during that time when it crashed. And that's what they don't kind of talk about. And so when we were reading, we said, wait a minute, when it crashed, these people got paid. But that's what they don't discuss, right? Because what's in the fine lines is kind of where the truth is. And so to your point of why is there a rally in Ukraine? Because people can't get to the money right now. People are leaving Ukraine, right? They're trying to figure out what's what and who's who. They can't get to their bank. So something that's digital, something that's automated, something that's easily accessible. Just think about it now. If something was to hit, I live in Atlanta. If something was to hit Atlanta, we're going to flood flood the banks and the supermarkets. But what happens when the bank is out of money? What happens when the bank says you can't access your money? What happens if the bank has a data breach? What happens when Wells Fargo says we've been invaded by Russia or another country superpower that we can't even see your bank statements. You no longer have access into your money. So with that being said, we know that there's insurances on your money. But what if the internet goes down? What if there's power? And so these are nuances, right? And situation, people never thought that we would be living in a pandemic, and certainly not in it for this long. But it has forced us to rethink the way that we do business. It has forced us to rethink some of the decisions we make financially and being poised around in a space. And people are jumping on it now, Jennifer, because there aren't any laws around it. I mean, just here recently, individuals that had an Airbnb were not even paying taxes. So now it's on the government's radar because it has made so many billionaires that, hey, the government needs to figure out a way to tax this. So they need individuals to do market research to figure out, okay, what can we do? Because this is an unknown space. So people are rallying around it because people have literally gotten paid. And then two, in times of war and famine and pandemic, it's a digital currency where it's going to be easily accessible. And so not having all your eggs in one basket and not even having all of your money in one bank. We know that after you get to a certain point financially, you have to spread your money out to different banks. But what happens if all the banks are closed? Nobody has ever thought about these questions, but we know during the 1920s, 1922, when the Great Depression hit, one of the first things that happened, individuals could not get to their money in the bank, and the banks gave out bonds. So when the bank runs out of money and they say, hey, we can't access your money, what are they going to give you? They're probably going to give you crypto.
Yeah. Good.
And that's
good.
just speculative. That's just speculative, and that's linking what Spelman taught us, right? The economic with the historical with the cultural sensitivities, the nuance, what's going on. So all of these things, like Spelman says, are interconnected struggles of oppression.
Yeah.
Mm-hmm. And Lauren, if I could add, and you touched a little bit on this during the presentation, but Square One, initially, our name says it all. Like, we're starting at square one with a little bit of information and just watching the flow of most financial companies and how they report on crypto. And the same discussions that they're having about crypto as a global financial language that everyone is learning to speak. There were some key notes that we picked up on that this is similar to how countries saw gold bullion. So like I said, it's a global language that everyone is learning to speak. And unfortunately, but in this unfortunate circumstances of Russia and Ukraine, we can see where crypto has stepped in as the platform that people who cannot access their immediate functions, they can't go to the ATM in Ukraine or in Russia actually to access US dollars, they can cash out in Bitcoin and cryptocurrencies elsewhere. So our team did focus on watching this crypto conversation, and we went back and forth a few times about which one to invest in. And neck, because of our risk tolerance, we were looking at Ethereum and then Bitcoin. And what really won out was the stability of Bitcoin, but also its accessibility. And that was something that our team could really jump on board with. And then just in time for our presentation today, of course, we had the executive order that came out about regulating Bitcoin or cryptocurrency and exploring ways that the US government wanted to protect investors. So Lauren touched on all of those items. We're very excited to hear the other teams that invested in Bitcoin and also the other cryptocurrencies so that we can continue to educate ourselves. And Lauren mentioned it earlier, we are interested in investing in other cryptos once we learn a little bit more. But Bitcoin is the way to go, and that's why Square One jumped on board.
I love it. Thank you, ladies. That was awesome. Awesome. I appreciate it. All right, I see Go Get Hers is ready. I see you guys are ready and we can see your presentation. So awesome. Let's see.
I don't know why it's taking a while to load on my end.
That is
Okay.
fine.
Can you
There
all
we
see
go.
that okay?
Got it.
Great, and good evening, everyone. I am Catalina Edward Mons, and I'm joined by my members, Jackie Sears and Renee Wilson, for today's presentation. Cryptocurrency, It's a Wonderful Life. The tagline, It's a Wonderful Life, was actually added as this conversation. And many of you have seen the movie where George Bailey stars in the show in a little town where there was what they call a run on the bank. And by all intents and purposes, there was this just calamity in the town where everyone wanted to get access to their actual dollars. And so George Bailey was pivoted. He diverted from what he had hoped to be this wonderful honeymoon around the world, because he had to go and be present at the savings and loan that his dad and his family had started many years prior. And so what we'll do is we'll share a little bit about our cryptocurrency journey and the research involved. But before doing so, I'm going to give a shout out to Lauren and the entire team that just presented prior to us, because the kind of research and the depth and breadth that they provided certainly affords us with the opportunity not to have to repeat those details, because certainly they're of value. But the beauty is our strategy that we took was a little bit different. Not only did we take time to look at the research, and one of our team members, Jackie, as she's standing in the Publix grocery line, picks up a copy of the Cryptocurrency Complete Guide and started digging into the understanding exactly what it is, what's the layman terms, and how we as novice investors could understand really the basics of cryptocurrency. And so again, while I think that there's such value in understanding cryptocurrency as the product, that is the technology behind it, the blockchain, the notion of not having a lot of coins and tokens in the market, our strategy, on the other hand, unlike the focus, the honing in, if you will, on the product itself, the what we were purchasing, we needed as a group to step back and understand process. And what that really means is that as we think about investing, we don't want to just think of it as purchasing a piece of property, but understanding the whole process of buying the property, identifying location, understanding the value of geography. In like manner, our strategy for investing in cryptocurrency was more about process and less about product. And I'll continue. And so again, we examined a variety of resources really to help us to identify what was the best strategy to invest. And one of the things that we all collectively had come to understand is that we were pretty much, and again, shout out to Jennifer and the entire team, what we've learned with the goal getters is that our pulse and our risk aversion rates are just about the same. There's some tug of war, but we also recognize that there's such value in being in a group of collective minds, because we were like, well, hey, we can buy all the crypto there is, but we wanted to know what the other things that are important to us were things like our the information. So if you look out, and I mean, I'm sure all the teams have done it. Before we started, not only were we buying magazines at the counters in the grocery stores, we saw that there was really this contradicting conversation. Is crypto good or bad? You know, is Bitcoin really going to just crash the market, or is it going to be really the best thing since sliced bread? And we read both pros and cons. We read both sides of that spectrum, because we thought that, that's important information to know. But again, I'm going to still hone in on this notion of the process. And because our team was quite risk averse, and because we knew that this was a learning experience, one of the things that we certainly wanted to also do as we started to think about what to invest in was we recognize this value of our own identity, if you will, as investors. And so based on our collective levels, we focused primarily on two coins, which again, I think Lauren did a fantastic job identifying the variations of coins and investments that are out there with Bitcoin and Ethereum, and you can see those differentiations on the screen. But I think one of the things, again, that never came up in the previous conversation, and one of the things that we want to hone in on in our conversation, is that when you make an investment, it also has to take into consideration the question regarding identity and your own your information being shared in a marketplace. Because it is true that there are risks involved, but it's also true that while there are more players and there's a diversity in the marketplace, that also means that there's going to be probably a great deal of persons out there who are looking, if you will, to steal identities. And so I'm going to turn it over now to teammate Renee, who will kind of explain a little bit about some of the platforms and then how it is and what it is that we decide to invest on thereafter. Renee?
Sure, thank you, Catalina. So we looked at a few different platforms. As she shared with you, we were concerned about our identity and what was safe. So we want to do the exercise, but we also want to do it with peace of mind. And we wanted to make sure that we were not putting ourselves at risk for the purpose of the activity. And so we looked at Robinhood, and the pros of that, it was no account minimum, very streamlined interface and cryptocurrency trading, but it had very limited customer service. That was important to us because we're still learning. We are, of course, we have Jennifer as a resource, but we don't want to bombard her. Part of this is for us to wean ourselves off of our instructor and for us to learn and get our hands dirty. Venmo, some of the pros with that was it's quick, convenient, and easily can do payments. It's free to send money from your bank account or debit card. Some of the cons were payments are public by default and you can't cancel payments. With Cash App, and these are all the platforms that we know there's a plethora of them out there. These are the ones that we already understand the language, because really investing is very personal. And so the way that a different demographic, i.e. our younger generations will invest, like one of our team members, Jackie, her children, this is old news to them. And they're like, Mom, glad you caught up, okay? So we accept our place and our role, and we're glad to catch up, but we also have to do it at a level that we're comfortable with, right? And so we were also looking at Cash App, and some of the pros and cons with that was it's primarily for currency exchange, easily make and receive mobile payments, and you can buy and sell Bitcoin. Sounds great. What was a con that is very concerning to us, it does not come with FDIC coverage, and it cannot be used internationally. And so the FDIC, even though we're not talking about really bankrolling anything, we still want that confirmation of that that's a safe place for us. And because, and another part of this too, ladies, is that although we're doing this for an exercise in the learning program, it is eventually, like I said, to wean ourselves off of Jennifer and for us to put this into practice beyond this class. So this doesn't stop after this year and we are done with the class. Coinbase is another platform. The pros was that it was the most established cryptocurrency exchanges in the US and one of the largest in the world. A con was it had high fees and it had the highest fees than the other cryptocurrency exchanges that we were considering. So we decided not to do that as well. Next slide, please. So the one we went with was Stash, and there was a few reasons why. One, I have 2 million reasons why, because according to yesterday, I received an email from a Nigerian bank saying that I was, they had $2 million waiting for me. All I have to do is send my passport. So I need to protect that $2 million, ladies, right? So we went with Stash because we already have a relationship with them. So that is one less opportunity for our information to be exposed. Some of the other platforms wanted our social number. And like I said, we're in a certain demographic and we don't give that to anybody. Even though when we were at Spelman, it was a part of our ID card, but we have learned to kind of hide that. So we weren't comfortable sharing that. And there were some that we were really close to using, but we just didn't want to do that. So we stuck with Stash. It provides the security that we wanted, and it also provided long-term growth potential. It helps to diversify our investments. It was future-proof, and it allowed us to mix our risk level based on our needs. And with that, there's some positives, and some of the negatives is, although it allows you to mix your portfolio, you do not decide on what that mix is. And so that it was a negative, but again, because of all the other reasons, we didn't want to learn the lesson and then lose our security in other areas. And so once we started the portfolio and we invested in it, it deemed where those assets went to, and it went into 35% into bonds, 33% into US companies, we don't know what those are, 20% into foreign, and 7% into up and coming, and the remaining part was into cryptocurrencies. Now, we understand that our exercise is for cryptocurrencies. However, the way SMART approaches this part is that your SMART portfolio reflects your entire portfolio. So that is why cryptocurrency is a small portion, is something that Jennifer shared with us, that we should be in the game, but that should not be all the game that shouldn't be the only game that we're playing. And so our SMART mix has cryptocurrencies and a percentage that's less than 10%. And someone else with a different risk level is probably higher, but for our profile, it was 5%. Next slide, please. And so once you enroll into the SMART portfolio, again, the cryptocurrency selections, which they chose for us, was Ethereum and Bitcoin. And that actually was what the two that we wanted to do. So as we were looking at those different platforms, we were looking at it for the purpose of getting into Ethereum and Bitcoin. So we did feel like we were in the right place. It was a different experience than we expected, like I said, because they choose the asset allocations, but we felt like we were playing the right game, or playing towards the right particular products, being Ethereum and Bitcoin. And so here we see the market summary for Grayscale Ethereum Trust. And it was, at this point, it was $21. And like everything else, it was not doing well. And, you know, we had this discussion with the team. A lot of people were concerned about some of the numbers, but I said, everything's on sale right now. So although it's not highly performing, as you see, is what's down 71% from the day before, but again, now's the time to buy if you're in that position. And then the Grayscale Bitcoin Trust market summary, that was actually doing well at this particular time that we did this capture at 26.34, well, $26.34, not 0.34. And it is trending better. Next slide, please. Okay, SMART portfolio is anchored by Vanguard's S&P ETF and foreign heavyweight ETF. So Vanguard Total Stock Market Index Fund, at this time that we took this screen grab, it was at $214.28. It was doing a lot better. And the market summary for iShares was $66.27. And that too was trending a lot better. Next slide, please. Sorry. So that is the go-getters. We are admittedly really learning. And Jennifer, I know you said you had some questions about our inputs. It may very well be because, as I said in the presentation, that SMART portfolio kind of takes over, but we'll work with you with those numbers. We are excited to be in the room and to be learning from all of you, not just from Jennifer, but from all the ladies, and we welcome any questions that we can answer for you right now.
Listen, I just want to say, I love the presentation. I love the angle that you all took. You know, one of the things that Adrian and I set out to do was to also create some flexibility in how we invest, right? And so the approach, which is why I'm so glad you guys were ready to present tonight, was that you all took a little bit of a different approach than some of the other teams. And I wanted to make sure that we could highlight that, right? Just to say, hey, you know, we wanted to dabble in some crypto in the way we felt comfortable doing it, right? So I appreciate you all doing that. I think that was great. I also love that you included in your presentation where you compared the pros and cons of the different platforms, because I don't know that that's something that we've actually seen. So I appreciate you all coming from the place that you came from too, of actually doing that, because I was like, oh, that's good to know. I didn't realize that, you know. So that was enlightening to me. The one question I have, because I want to make sure if anybody else has any questions, is what was, so in the where you guys showed the breakdown of the asset classes based on the risk, so what risk profile did you guys fit?
Moderate.
Moderate, okay. That's what I thought, but I was just curious if you guys played around with that to see, okay, well, what kind of exposure would you have had you been maybe aggressive growth? Would it have given you more exposure to crypto, I wonder?
That's a good question. We'll do that. If
that's a very good
will
question.
allow us to report out that, we could do that exercise.
I'm just curious. I just
Sure.
I think one of the things also that we learned through this exercise is that we had to recognize that while there are many people who wanted to get into the market as investors, there are also many people out there who will be encroaching upon the data, you know, the whole artificial intelligence world. And so even with the international issues with Ukraine and Russia, you can rest assured that there's someone out there, and we already know Russia's reputation in the computer space. And so while we know that there is probably Bitcoin being exchanged, we don't know who's controlling those transactions. And so I think, again, at the end of the day, we want to be able to be long-term investors and not get have such a negative experience where we lose everything and then not want to go back and find other avenues for investing. So thanks for the opportunity.
I love it. I love it. Hey, Justine, I have a question for you, especially because one, you've joined us and I appreciate you last minute joining us. But what are your thoughts as our resident expert and our instructor on crypto? What are your thoughts about, you know, the crash that we had at the beginning of the year, the rally that we're having, and how are you feeling overall about what you're seeing in crypto right now?
Well, first of all, I wanted to tell this group, you did a fabulous job. I too appreciated that you actually analyzed each platform to see, you know, which one you felt more comfortable with. And I just think you did a great job. So good way to get your feet into the water and get started with crypto. But when it comes to how I feel about the market, I think it's still in a good position. With Biden's new executive order to really do further research into crypto and develop a team to further see if, you know, to further deep dive into it, it's actually going to be really good, because the real goal of the government is to figure out a way to get money out of everybody through taxes, figure out a way to properly tax it, and to also make sure that it's safe. And so I feel that with more insight and more examination into it, it'll become a little safer. In all honesty, about 70 to 80% of these altcoins are scams. And so you really, really have to be careful. And so the overall cryptocurrency, the top 10, Bitcoin, Ethereum, Cardano, but mostly Bitcoin and Ethereum, those aren't going anywhere, and they will continue to go up. Just like any investment, you know, it changes with the market. Now is a good time to look into getting back in now that it seems like it's starting to go back up. So I really think that it's a safe investment if you are investing in the right product, and not just investing in any altcoin because you want to get in and make $1 million overnight. A lot of those aren't really good investments, but if you are in the Ethereums and the Bitcoins, I think you're safe. And I think now is the time to buy, considering the fact that they're low and they're starting to rise again. So the market's not going away and cryptocurrencies aren't going away. More countries are investing in it. And I think that the fact that it's decentralized is really what draws people. And it's what helps make different groups or different countries, it helps it to level the playing field. So I think that's also attractive, and I think it's only going to continue to grow. So this is a good time to get into it. The market will fluctuate. The U.S. market, we'll see how that goes over the next year or so, with the fact that we're in inflation and we're trying to start to curb that. So yeah, it's a good time to invest. I'm optimistic.
I appreciate that. And I also appreciate how, I don't know if this is the right word for you, but I feel like you are cautiously optimistic in that, you've been very upfront with saying, hey, I don't think, I think you should start learning about this, but I don't think you should dump your entire retirement into this, right? Just like, don't put your eggs all in one basket. And I think, Renee, you made a really, really good point, which I'll hit on later, is that right now, we need to think about, and sometimes it's very, very uncomfortable when we see these declines in the markets, and we look at our 401k, or we look at whatever we have invested anywhere, right? That yes, we should be buying low and selling high. We hear that, but then our emotions take over because we see a decline and we're like, oh my God, that was my money. I'm down, whatever, right? And so we freak out. And so my encouragement to all of us is, especially if the money you are putting away for the long term, is that you don't invest with your emotions, you invest and remember what your goals are ultimately, right? And so that you look at the declines in the market and you say, hey, this is an opportunity to buy, like Renee said. That's how we should be viewing, like Justine said, this is a buying opportunity. When you see dips, when you see declines, if you have some money to put to work, that you should be doing that when the market declines, because that is a buying opportunity. That means that whatever it was you were looking at is now cheaper to get into than it was when you first said, oh my God, it's on a tear, And so that is my encouragement to you, is that you sort of reframe your thinking a little bit, and that you realize that you've only really, really, really lost the money if you take it out, okay? If it's still there, yes, on the screen, there's a decline, but you only realize the loss when you pull it out, okay? Otherwise, that temporary loss you have the ability to make it up when the market does turn around, okay? And so, so that is my encouragement to you. But ladies, thank you so much. You guys did a phenomenal job, this evening. Square one and go get hers. Y'all did it tonight. So I appreciate that. And Justine, we appreciate you so much for all the work that you do.
Thank you.
Does anybody else have any questions about any of this stuff tonight? Any of the presentations, or of any of the of these two teams this evening?
Jennifer, I have a question.
Yes,
Have any of the teams researched stashing, where you can actually reinvest your cryptocurrency with the company? And I just wanted to know what you all thought about that. Some of the stashing rates have been up to 5 to 8%, depending upon which company you reinvest your coins with. So I didn't know if you all were familiar with that, and if has anybody ever, researched it and what you thought about it.
So I was shaking my head, Justine, as you were speaking, because the Stash app is obviously uses, again, AI, and it always serves up these new widgets, if you will. It's kind of entices you and incentivizes you to do more things. And so I do think that there's an option to reinvest, but I'm not sure the right language, that the app would utilize.
So what they said, and I was wondering if Stash, considering that's the name, actually had the option. But CoinMarketCap, Crypto.com, several of the major platforms allow you to do what they call Stash. And basically it's allowing them to hold your money and reinvest it, just as you would if you were to put your money in like a CD or even like an annuity, but you don't have the fees. And so you just let them hold your coins for a certain period of time. Usually the minimum is 3 to 6 months. So you can't withdraw it. So if you give them your Bitcoin and say, okay, and you can stash my Bitcoin, you can't withdraw it. And every month you may get, a certain percentage back. And if you plan on investing long-term, then stashing is a good way to make money off of it if you're not going to use it at all. Of course, you'll take dips, and so you'll make less at some times, but it's a good way to make money if you don't plan on taking it out. Just everybody, you might want to look into stashing.
Is that like it reinvests the gains that you make, or it's the gains and also you've got to lock in not just the gains but also whatever your initial investment was?
It reinvests everything. So let's say you buy 100 Bitcoin and you say, okay, I'll stash all 100, or I'll stash 50. So what they do, they will take that and they'll hold on to it and give you interest on it. And you can't withdraw it for a period of 3 months, 6 months, a year, whatever you all agree to. And after that period's over, then you'll be able to take all of it back, the interest and your earnings.
All right.
I apologize that I didn't speak about it before, but it's something that you may want to look into for those that have that decide to purchase cryptocurrency. Look into a platform that will allow you to stash it. And that way you make money off of, interest off of it. And some of the platforms, when you're researching them, have more competitive rates than others. So that may be one thing you want to consider, because some of them have, even depending upon the coin, have gone up to 8%. And that can be pretty good.
Now, is that a guaranteed rate? So are they guaranteeing the rate that you're making, or no?
They're guaranteeing the rate. Also, and it depends upon which coins. They'll tell you which coins you can do that with. It's not with every single coin or token. It's just with certain ones, and the rates usually vary by token or coin. And one other thing, credit cards. There are some credit cards that will that if you all want to stash as well. Can you
pin yourself real quick?
Yes. Yes.
Okay.
There are some credit cards that will give you, if you spend a certain amount, they'll give you back a certain amount and they will stash it for you. So that's just an option too.
That's awesome. I really appreciate that. So thank you for sharing that with us. I didn't realize that you could do that. So that's good to know. That's good to know. Awesome. Well, thank you, ladies. I really appreciate it. I want to go ahead and move on to the next thing that we have on our agenda, and that is to cover, our next assignment and bringing it back to the basics. So let me go ahead and share for this evening here. Okay. And all right. So we're going to take, we've had from the beginning, we kicked off the investment club investing in stocks. Coming into this next session this year, we also have done stocks. We did them in the form of IPOs. So now I want to go just a different direction, but really come down to the basics to really cover some stuff that I don't think we reviewed or covered when we kicked off this season back in September. So let me just move forward. You know, for those of you that, I don't know if we have any football fans at all, if any, you know, anybody, you know, follows football, but the Hall of Fame coach Vince Lombardi started off every season with whatever new players and returning players saying, this is a football. I don't want to assume that you all know this is a football, so I'm going to start from the beginning as if we're all new and we don't know anything. And so when Adrian and I talked about it and realized that many of you all had a bunch of questions about, you know, the pace at which we were moving, that we had some new teams that had more novice investors, that we really needed to take a step back and really go back to the basics to make sure that we all can just, you know, just start from the beginning and learn and really sort of absorb each asset class that we are covering. Okay, so we're taking it back to stocks. And so obviously we've covered this, but you know, in investing, when you invest in securities, there's a bunch of different asset classes: stocks, bonds, mutual funds, ETFs, options, which we still haven't covered yet, commodities we haven't covered, and then obviously alternatives that include, you know, cryptocurrencies and also real estate, as well as some other things. But we want to talk about stocks this evening. And so I just want to go ahead and kick it off and say, hey, you know, I don't think that we, you know, in the investment club set out to say we're going to make a bunch of experts out of our Spellman sisters, right? But we definitely set out to say, hey, we know that there are a bunch of our sisters, and specifically, you know, Black women in our communities that are, you know, in our families that are around us, that all could really do better by learning a little bit more than what we do know now, right? That can help us make decisions when it comes to our money. That's something I'm super passionate about when I work with women, because there are just things that affect us differently that we got to make sure we realize, and that sometimes some of the people that help us with our money, they don't use the lens of the things that do affect women. Like, you know, when do we have kids? Do we stay out of the workforce? What does that ultimately cost us, right? You know, it costs us in our 401ks or whatever your workplace retirement things, whatever workplace retirement programs you have. It costs us in promotions. It costs us in getting raises, right? When we have to decide what, you know, when we come to a point that oftentimes falls on us is the caregiving for not just our children, but our parents too, right? What does that cost us? Not just the physical toll, but there's a financial cost, right? There's a time cost also to all of the things that we manage, right? Let's bring in divorce, you know, a separation, how all those things influence us. And so Adrian and I set out to say, we want to do better by making sure we're just more informed. And so to become a good investor, I think we all got to commit to learning a little bit more, right? Some of you all may say it's like drinking out of a water hose, what you all have had us doing, but really it's to learn a little bit more about, you know, that asset class in particular tonight is stocks before we make an investment. And then to be a prudent investor, we got to gather the information in order to make a good evaluation on that stock investment. And then a savvy investor learns the meaning of all this stuff. So we're going to cover some stuff when it comes to stock investing that we really didn't cover before. Though you all had access to the information, I just wanted to make sure we touched on all of these different financial metrics that we really want to look at in a way that's not taxing to us, or that we have to become mathematicians, right? These math people to understand what they, to calculate them, but we should at least have some knowledge about what they mean and how they impact us. And then a knowledgeable investor understands the value of stocks and why they decline periodically. And then those that become great investors know that if they're focused on the long term, that based on what the stock market has shown us historically, it has always made a gain if you're investing for the long term, okay? So I incorporated some slides that I actually use with some of my clients, to just tell the story of why you should invest with your head and not your headline and not the headlines. And that is because, and this is one of my favorite slides, because it shows that really at every point, I could have gone back to the early 1900s, but it wouldn't have fit on the slide. And that is that at every point, every year in time, there is something going on in the world that does affect the markets, okay? It affects the stock market, it affects the bond market, it affects commodities. It has shown that it's affecting crypto as well. Sometimes that relationship is an inverse relationship, but that here, the point of this slide is I want you to see that there's always something going on. However, you can see when there are ups and you can see where there are downs, but I want you to focus on the fact that there is always a bounce back no matter what is going on, okay? And so there are plenty of reasons not to invest because there's always stuff going on that could keep us from investing, right? You know, that could be just pick a year on here and you could say, well, I'm not investing because of X, right? You know, during Y2K, we thought we weren't, you know, everything was going to implode and we weren't going to have access to our money. For those of you that remember that point in time, you know, and so there was a decline. There was the, you know, the .com bubble. And yes, that lasted for a period, but those people that were focused on the long term, when the market turned around, they made money, right? Because it did come back. And so this is a 30-year period here. If you invested $10,000 in the stock market on December 31, 1990, right? 30 years later, you didn't put anything else in, that $10,000 would have been worth $211,000, even with everything that happened in that 30-year period, okay? This next slide, can anybody tell me, if you unmute anybody, what are the patterns that you see on this slide here? Is there a pattern that stands out for you? Anybody?
The LG cap is a lot of orange on here, as well as a lot of brown. The HY bonds. Let me see in the grid. Okay, high yield bonds,
yep.
And large cap stocks,
yeah.
in the S&P 500. So index funds, yeah.
Well, so this actually covers all of the asset classes. And the answer is that there is no pattern to what you see here. And it really just goes to say that none of us have a crystal ball to determine what's going to be hot, what's going to outperform in any given year. Okay. However, I did notice something that I was like, well, hold on one second. REITs, which are the reds, squares, they seem to rise to the top, you know, above all others. So that top line are the number one performers in that given year. But really, you know, the overall from this slide is that we don't know what's going to be hot. What asset class is going to be the next thing that's going to outperform year to year? You know, it could be REITs one year, and then it could be small cap companies, right? It could be large cap companies. Cash, you know, in 2018 was the only thing that performed, right? You having your money in cash. And so we can't time the market. We can't decide, you know, what it is or think we know what's going to be hot. So my encouragement is whatever goal brings you to investing, that you stay focused on that, and that you make the decisions based on your goals and not what you think you can pick out, and not what you think you heard somebody say on Facebook or you read on Facebook, right? Or on Telegram, whatever. But it is to just focus on what it is that's important to you and that time period, and that you stay focused on that, okay? And you go and invest, because over time, the markets have shown us that they will produce a return if you're focused on your goals, okay? So next, for some reason, here we go. This is a quote: the way to get started is to quit talking and begin doing, which all of us have started doing, okay? So let's talk a little bit about, some of you will hear about the investing styles, which are value versus growth investing. So value and growth refer to the two categories of stock and their styles. Value investors look for stocks they believe are undervalued by the market, while growth investors seek stocks that they think will deliver better than average returns. Anyone have a guess? Give me an example of a growth stock. What is this a type of, what company do you think would be considered a growth stock?
Facebook.
Facebook. So yes, tech companies tend to be growth stocks. They tend to be younger in age, so they haven't been around as long as value stocks. Value stocks are, I like to call them the good old boy network, okay? For lack of a better word, but value stocks tend to be those companies that have existed for a long period of time. Like, give me a
Walmart.
sector. Walmart, yeah, Walmart would be considered, yes. In terms, sorry, you guys, my little ones are yelling right now, but in terms of a sector that is considered a value sector, to invest in would be financial companies. So think of your banks, that have been around since the 1920s, right? So value stocks are not necessarily sexy like your tech companies, right? You're not going to see a ton of like change in the way that you will see tech companies create big change, but value companies are those that have been around, that have proven they're going to stick around, that have stuff that we all need. They're just not sexy, okay? And so this little chart here, just gives you sort of the differences, in terms of price. It's considered a value stock because it's currently undervalued. Growth stocks typically are overvalued, right? Investors look at them differently based on what their future potential can be. The PE ratio we're going to talk about in a minute, the price to earnings ratio. The value stocks tend to have a lower PE ratio usually, and then the growth stocks, like your tech companies, their PE ratios tend to be a lot bigger. Value stocks usually will have dividends for sure, and the dividends you will see tend to get bigger year over year. Growth companies, if they have a dividend, they're typically pretty low, but oftentimes there's no dividend because they're not paying out. Look, they're all about growth, and a lot of times growth requires reinvestment versus paying that out to an investor. And then in terms of risk, you're not going to see huge, tremendous in value stocks, this tremendous growth appreciation, no meteoric appreciation versus, I don't know who said Facebook because I wasn't paying attention, but if you actually charted, let's call a JP Morgan versus Facebook, the chart for Facebook will be astronomical based on the growth that they've had since they've existed, okay? But that high growth also comes with a lot of volatility, which means there's a lot of ups and downs. And many of you, if you've invested in tech, that has done well overall, but tech really has not done well, since last year. For a number of reasons, but you'll see a lot of volatility. So value investors are looking for those hidden gems in the market that they believe are underpriced, but that have good prospects, that have good fundamentals, that are still doing well. And there are a few reasons why those companies are undervalued. And so it could just be a number of things. Something happened in the economy. There was a crisis they had to deal with, but overall the company is very stable and is going to do well. Okay. So why do companies issue stock? Many of you know this, but I know there's some of us who may not know. So companies will issue stock because they have to, raise money because they want to expand their business in some way. That could be a capital expenditure. It could be to expand into other countries, new markets, right? But they need the money, so they need to raise money from the public in order to have some of that growth. Also, you know, they issue stock because they don't have to repay their stockholders, okay, their shareholders for that investment. You're investing in that company, and that company, they do what they're going to do with that money, right? But it's not a loan, so they don't have to pay you back. They're not issuing a bond. When you become an investor, when you become a shareholder in that company, you're not giving them a loan, you're making an investment. And so though dividends aren't mandatory, the companies that do issue a dividend tend to redistribute their earnings to their shareholders. So about 30 to 60%, depending on the type of company, will get redistributed back to shareholders as a dividend. And then companies also reward shareholders for their investments by giving them voting rights. So you become an investor in a company and you get voting rights. So you get to determine what happens with that company, okay? So what's in it for you as an investor? There's a whole lot of different answers here, but some of them is, hey, we become investors because ultimately we want to create wealth, right? For us, for our families. Maybe it's not all for us. Maybe there's a charity or something philanthropically that you're very passionate about, but it's to create some kind of wealth, okay? To diversify your assets, right? So you don't have all your eggs in one basket. Maybe you own some real estate and you realize, hey, I got to go invest somewhere else too, in case, hey, something doesn't do well. It's sort of like the piston theory in a car, that maybe when one thing is going well, the other is not. So you've got to diversify so that you have things going when things aren't going well. You have another type of investment that does do well, that performs. You get income from dividends that are paid either in cash or in additional shares. That's what's in it for you when you become, you know, an investor in stocks. Obviously, there's the appreciation of that stock. You know, we want the stock to appreciate in value from what we paid. That you know, we see that increase, and then there's an increase in value from stock split. So when stocks, the price per share reaches a certain amount, the board usually will vote and say, hey, I think we should split the stock, which means you now own more shares of that company. It is initially at a lower price, but if they keep doing what they're doing and the price continues to increase, you now have more shares that become more valuable, okay? So what are some of those key metrics that I want you guys to know and understand? Market cap. Market cap is the value of the company, and it's you figure that out if you multiply the total number of outstanding shares, stock shares of that company, times that share price, right? So in that example, I say if I owned a pretzel companies and there were 42 total outstanding shares, and those were priced at $6 per share, the market cap would be $252 of my company, okay? And so you will hear, so Chastine said, hey, large cap in that graph that we showed, the orange, right? So a small cap, what does that mean? Small cap companies, those are companies that have values between 250 million and $2 billion, okay? Those are considered small cap companies. Mid cap companies are between 2 and 10 billion. And then large cap companies are those companies that are 10 billion and above. So many of your tech companies are considered large cap companies. Now, Walmart is a large cap company too, okay? But I want you to, you know, when you hear some of that, this is just getting you familiar with that. There are 11 different sectors that the stock market covers. And so I want you to start, you know, in your information gathering is saying, okay, well, this fits into this sector. This company that I know that I'm interested in fits into this sector. The dividend yield, that metric helps investors understand where the company is in its stage of growth, right? So many times early stage companies, they don't offer dividends, right? Because they're reinvesting that money instead of paying it forward to their shareholders. But more mature companies, they will tend to offer a dividend, and usually a higher dividend. High dividend yields tend to be associated with companies that offer staple items or services. So your consumer goods companies, you know, tend to have higher yields. Revenue, what is revenue? So I don't want you guys to think you have to be finance people or accounting people, but these are some of the key metrics that I want you to start beginning to be familiar with so that when you are looking at investments, you're like, okay, these are the things that I want to track, or that would be good to track, so that I can see in numbers. I'm a big believer is that numbers don't lie, right? The great philosopher Jay-Z said, men lie, women lie, numbers don't, right? And so just these are some of the things that I think are just helpful to know and see when you're evaluating a stock investment. So revenue is the total amount of money a company generates from sales of their goods and services. You want to see that number increasing year over year, okay? Net income, that's the total income the company has that brings in minus its expenses. Again, you want to see that the net income is increasing year over year, okay? And that's a good indicator of the growth of a company. The earnings per share is the company's earnings divided by the total number of its shares. A high earnings per share can be a sign that the stock is healthy and is, you know, a potential buy for investors. There are some other things. One of the things that I'm introducing today that I didn't introduce initially, but that is a good indicator of you know, a healthy company, is what its free cash flow yield shows. Okay, free cash flow yield acts as a positive or negative indicator of how solvent that company is. Okay, should they need to access some cash for a major emergency or some catastrophic event, or, you know, they get sued by somebody because they did something in some country, is how quickly they can access some money. And so the higher that yield is, that's a healthy indicator of that company, okay? And so in general, yields above 4% are acceptable. So if you see, when you calculate it, or when you find it, many of these numbers, and I'll talk about it in a minute, y'all don't have to calculate, okay? I just want you to be familiar with it, with what they mean. But when you start thinking about your next investment, you know, if you see a company that has 4%, that could be a company that you say, okay, I want to do a little bit more exploration on this. If it's lower than 4%, you could say, I don't know, because if something does happen, they're not going to have the cash on hand to respond to whatever it is, okay? And so here, the bigger the number, the better, but 4% is that the place where you should say, okay, this is interesting. I think I want to take a closer look at this company. Price to earnings ratio, that tells you what investors are paying for that stock in relation to their earnings, okay? So this just kind of tells you how to calculate it. A low PE may indicate that stock is underpriced, or maybe an accurate reflection of where the company is and what its growth prospects are, okay? The price to sales ratio, depending on how you all decide to carry this forward, the price to sales ratio, it compares the company's stock price to its revenues, right? So it provides a revenue multiple. But this is actually a good number or a good ratio to look at if you're making comparisons within the same industry, okay? So if you decide you want to take a look at Walmart, then compare it to Target and compare it to, who compares to Walmart and Target? Maybe Amazon, right? Just taking a look at all within the competitors. It's not a good ratio to look at if you're looking at Walmart versus Bank of America versus a trucking company, okay, or a logistics company. So it really is good if you're making a comparison between actual competitors, but not if you're comparing different industries, okay? The debt to equity ratio is how much debt does a company have, right? And so some, you know, you will expect companies to have debt, but a debt to equity ratio that is higher than 1 suggests that they have a lot of debt, okay? And so you want to look at companies that really are, you know, that ratio is 1 or below, because their debt servicing is important too, right? So companies can get in trouble, just like people can if they have too much debt, okay? So that's a really, really good one. And then the last 2 is beta. Beta, I hear you guys talking about beta all the time. You call it risk, right? What your risk tolerance is. The beta really goes to show you how risky or how volatile that company is. And so the stock market, the base for beta is 1. That's where the stock market is. And so if there's a company that has a beta of 1 or below, that says they're not gonna have a lot of volatility. When it goes above 1, you'll see, if you chart the stock price of that company, that it can be all over the place. And the higher that beta is, man, you're going to see really, really huge swings. Okay. So if you are risk averse, or you want to be a little bit more conservative, you want to pay attention to the beta of what that company has, and really look at, being at 1 or below, or less than 1. Okay. And then the return on equity is how well the company's turning equity into profit, right? So you want to take a look at that, because it tells you how much the bottom line profit of a company is for every dollar that the shareholder has invested in that company. Okay. And so these are some of the metrics that I think are just really important to use to evaluate. Okay. So having said that, this is the assignment. Okay. So the assignment for our next meeting is that I want you to look for a value stock. Now hear me, because I know some of y'all have gotten very, very creative, and sometimes have veered totally off of what the assignment is. And so the assignment is choose a value stock, not a growth stock, a value stock that you research and that you do a comparison on. You have the flexibility to look at any industry. If you want to stay within one industry, that's fine. If you want to go cross industries, that's fine too. This is the kicker. I want to throw in, not just for value stocks, but look for companies that can perform during high inflationary periods. Okay. And y'all, let Google be your friend. Y'all don't have to do this on your own, right? You don't have to reinvent the wheel. Go use what's out there. Okay. And Google, what are good value stocks during high inflationary periods? Okay. Or you can say, I want to look at stocks, companies that do well when there are times of uncertainty, right? You can pick either or. If you want to try to combine the two, hey, have at it. The flexibility is in that piece and in the industry you choose. But let's look to do value investments. Now I'll say this about look for value stock. Some of y'all that have been with us from the beginning have actually made some value investments. Some of y'all, invested in JP Morgan, that's in your portfolio, ExxonMobil. You've done, so some of you have already done some of this. You can't pick the same ones, okay? So I want you to stretch and go do something different, but this is something that we're coming back to, okay? So we want to look at value stocks, ones that do well either during inflationary periods or times of uncertainty, and go look, again, look, when you're doing your research, go use Yahoo Finance. You do not have to calculate any of these ratios, okay? I want you to know what they mean and how they impact you as an investor, but you don't have to do these calculations. I give you how to calculate it if some of y'all want to be nerdy, like sometimes I want to be, okay? But you don't have to do that. Yahoo Finance, Google Finance, if you pull up the investor relations websites of these companies, the public companies, they have to disclose their financials in the annual reports. Sometimes they do summaries in their annual reports. You can go to the SEC and you can look up what's called a 10K for a company, a public company, and there they have to give you the entire reports, not just the summaries, okay? Their financials. And in the financials, you can also find any of these numbers or if you want to calculate them. But Yahoo Finance, y'all, and Google Finance, they are the knowers of all this stuff, and they've already aggregated the data for you. So don't recreate the wheel. And then you can also go to Zacks, which they do some different research. It's free, but you can look at some specific ratios that you may not find on Yahoo or Google Finance. Like the free cash flow. I think the free cash flow you may be able to find on there, but if it's not on Yahoo Finance, you'll be able to find it on Zacks. Okay, so go use the stuff that already exists out there for this exercise. So I am going to drop, obviously, this presentation for you. I have also created the stock analysis spreadsheet that has been in your folders. I'm going to replace it with a new one because I added the free cash flow ratio on there that the old one doesn't have. But this is what I want. I want you to use the spreadsheet so that you can actually look at what you're comparing, okay? Again, the numbers, they tell a story, okay? And I want you to be able to tell that story with the numbers, but I want you to see it on here. And so I want you to look at the last 3 years. Again, all of that's available, Yahoo and Google Finance. These are the ones that I chose, okay, to compare for this exercise. So I went to Bank of America, United Health Group, which is United Healthcare, right? The insurance company, and Procter and Gamble. I said, I want to look at different industries, and I just want to look at these value stocks, how they've performed over these last 3 years. Can someone point out something that you notice in any of this with any of the companies? Anything that you just see just by looking at the numbers? Is there
Well,
anything?
you just mentioned a moment ago. Oh, I was looking at the yield. Go ahead.
No, go ahead, Kathlena.
Well, I was trying to look at the dividend, no, the cash flow yield. You said
Yeah.
if it's greater than 4%, that's good. So healthcare and consumer goods. But another thing that you mentioned is if the ratio, and I don't see the ratio, I apologize,
Can't
was
see it on
greater
here
than
because I
one, that
couldn't
they have
fit
a
the
lot
whole
of
thing.
debt. Yeah.
Yes,
So
yes,
just that one
Yes.
cash flow yield.
yeah. And then who else chimed in?
Oh, this is Simone. I was just going to say they're all large cap companies
Yes.
too.
They are absolutely. You can't see the market cap. So in the whole thing, so you have access to the whole thing, which includes all of the metrics that we covered tonight, okay? The one thing that immediately stood out to me when I looked at this after I entered all the numbers is, and this is what I want you to start picking up on when you look at the numbers is, well, hold on a second, Bank of America. How do we go from 2019 to having $85 billion in revenue, and then in 2020 it's $74 billion, and then 2021 is $22 billion? Things, look, all of these numbers should be going up for the most part, okay? You want to see a year over year, just at a very basic level, that they're at least staying the same, but they should be going up year over year at a very basic level. You don't even have to be like a guru, but they should be going up. And here the revenue has gone the opposite way, right? That was one thing I noticed. The net income, so 2020, what happened in 2020, right? What's going on? Bank of America has me asking questions. And so those questions should lead you to find out what happened, because you can, in the annual report, they have to disclose whatever happened in that particular year that caused their numbers, right? For Bank of America, COVID affected financials, did very poorly in 2020, and they suffered a lot. Conversely, I didn't cover tech companies, but if I had pulled up a Netflix, those numbers would have been off the chart, right? If I had pulled up Zoom, the numbers would have been off the chart because everybody embraced 2020. Tech companies during the pandemic like crazy. Financial companies were the worst performing industry in that year, okay? And so I want you to see the numbers, and if there's a blip, either up or down, like in a major way, that should lead you to ask some questions about what's going on with that company and to dig a little deeper. Because in that digging, you may say, I don't think I'm gonna be investing in that one. Which, when I dug a little bit deeper with Bank of America, Kathlena, you mentioned the free cash flow yield, which was really great, but then it's, again, with all their numbers, began declining, and then there's a negative, right? But when you actually look, so the free cash flow is how much cash do we have in case of a catastrophic event, right? The other thing was that debt to income ratio was like 24, was a 24 for Bank of America, which means they're highly leveraged right now. And so for that reason, you're going to see one of the sections is, would you buy or sell? I wrote sell. I'm not interested in Bank of America, right? And so your numbers should lead you to ask some questions. And if it doesn't, if everything is going up and you can get comfortable with your comparison. If they're all three of the companies you choose, their numbers for all those 3 years have gone up, then you just have to make a decision of which company you want to invest in, right? Make the decision you want out of your top 3. Here, you know, I said, okay, well, United Healthcare and Procter and Gamble are the 2 that I have left, because Bank of America, I didn't like what was going on with the numbers. And I actually was very comfortable with the numbers for both of those companies. Okay, everything has been trending up, right? Procter and Gamble has a bigger dividend yield because that's one of those companies, consumer staples, consumer goods, that has a much higher dividend yield than many other types of companies or industries. And ultimately, I actually made the decision to say I would buy United Healthcare because the numbers were trending right. I like their free cash flow yield was a little bit higher than Procter and Gamble. Their market caps, you know, were really in line. But ultimately, I also looked at price. The price, you know, per share was lower, and you can't see it here. I'm trying to see where I actually, because I have it up. So the price, their stock was, oh no, it wasn't based on price. It was just the numbers, really. I just felt more comfortable with their debt load and their free cash flow. Everything else seemed to be trending upward, but the price for United Healthcare was $486 versus Procter and Gamble at $145. But anyhow, the point is, I want you guys to look at the data and just start asking questions. You don't have to calculate anything. I don't want you, you know, listen, I don't want you to become this guru, but I do want you to plug in the numbers so that the numbers can tell the story, okay? And you become familiar with what those numbers mean. Any questions?
Yes, Jennifer, I have a question. Can we go back to that previous slide?
Yes.
So really quick, free cash flow yield, that's how likely will they be successful in the event of a catastrophic event, right?
How much cash can they put their hands on in the event of something that comes their way that they have to respond to? It could be a catastrophic event. It could be a lawsuit. It could be something, you know, something else, but maybe it's a big expansion. They just need access to that because they could be, you know, they could have first mover advantage if they had the cash to expand in some major way versus letting a competitor take over. But yeah, how much cash can you put your hands on to respond to this thing that we have in front of us right now? And so the higher that number, the better.
Okay. And then EPS, because right now, like if I was to look at this, I'm still a little confused as to how to read it.
Yeah.
Can you go over the EPS and what that means and how to read this?
Yeah. So the EP, and you have access to all of this. Okay. So the earnings per share really is a sign that your stock is healthy and is a potential buy for companies, right? The EPS is, it really, you want to see that the EPS trending higher, right? Because it's looking at the earnings of the, so if you have a higher EPS year over year, you're going to see that the earnings of the company have been growing year over year. Okay, so the two go hand in hand, saying that the company is doing well because there's been growth year over year, or is trending in the right direction if there's growth, right? So they are highly correlated with each other. Okay. So if your earnings have grown from 2019 over 2020 over 2019, your EPS, your earnings per share, have also grown over that previous period. Okay, so it's a healthy sign for it to grow year over year. Okay.
Okay, thank you.
You're welcome. Any other questions?
Yes, Jennifer, this is Simone. I do have a quick question. Looking at the metric that you just talked about, the free cash flow yield. So I'm looking at Yahoo Finance, and that is usually what I typically use because, like you said, all the calculations are right there. They do the calculations. Where do I find that? I don't see free cash flow yield anywhere.
So in the let me see, what do you guys see in front of you right now?
We just see your pink stock
Okay.
analysis.
So let me do this. Where are you? Okay, here we go. So this is the actual spreadsheet that I want you to use to do your stock analysis. This is the whole one, okay? And so again, it's kind of long, so it captures everything there. But there is a cheat sheet on there, which also has, you know, what everything is, what each of those metrics mean. And there's also how do you, I'm pretty sure, is there not? Did I not put in there how you calculate it? I need to put on there how you calculate it. So the free cash flow yield, Simone, if you don't see it on Yahoo Finance, you will see it in Zacks, okay? And I'm gonna put the formula in there on how you calculate it because you need the debt number, and then what you will get from Yahoo Finance is free cash flow, okay? And so you divide one over the other, but I'll put the actual calculation in there for you, okay?
Okay, thanks.
So you need their overall debt, their total debt, and then how much free cash flow the company has. And it's always, you know, by year. Okay.
Okay.
All right. What else? Anything else? Any other questions?
Is there an amount, a threshold or baseline that we should invest per person?
So the commitment to the club is, you know, the $100 a month minimum. And so that's just the minimum. So whatever you decide, that is a personal decision, because we've had some group members within a team that have done, you know, $100, and then we've had, you know, their colleague in the same team that have done 1,000. So it's just up to you, whatever it is that leads you to do, you know, to make that investment. Okay. Again,
Jennifer, this was fantastic. Thank you.
Thank you. We will have a bonus meeting that'll happen in April if anyone wants some additional help just on how do we evaluate the numbers that you've already, you know, plugged in. So sorry guys. So in the April meeting, come prepared with the companies, you know, the 3 stocks that you are comparing to make the ultimate investment in. And the numbers should already be plugged in. And maybe you're like, hey, Jen, how do I need to think about this? You know, how do I really evaluate? So I have this data, but I'm not really sure how I should be approaching it. That on that April meeting, we'll spend a little bit more time for those of you that want it, okay? And that is it. That is it, ladies. You know, so I want you to have a good time. I hope that was, you know, a bit of a refresher for some of you, but maybe a little bit of a deeper dive into what the numbers are and how you should be approaching your investments. Again, I don't want you to become a, you know, finance guru or a mathematician in how you calculate this stuff, because the numbers are out there for you to plug in. But I want you to realize that yeah, the data that you have access to is giving you a story, and that you should follow that story. And that story should lead you to make your investment based on what that data tells you, okay? So it's taking the emotion out, taking the feeling of, oh man, but I really just like, you know, Walmart. I'm just a big believer in the Walton family and how they manage, and that may be fine, but let the data tell you and support why that is, okay? When you actually compare it to whatever other comparison you want to make, okay? And then do that. But you know, if you guys don't have any other questions, that is it for this evening. And I so appreciate that you all plug in and spend 2 hours with us every couple of months. And so I don't take that for granted, and appreciate the fact that you guys do want to learn and help each other out in the process, okay? So thank you, ladies.
Jennifer, can you send the recording of this session out?
So Justine, once it's available, Justine will let me know. I'll grab it and then I will send it out. And then I'll you know, refresh the assignment for any of your of the team members that weren't on here, okay?
Okay,
you-
thank you.
Will you be putting your slide set in the
Yes.
folder?
I'll drop it in each of your folders, so you have access to all the presentations from tonight. In addition to, I need to replace the stock analysis spreadsheet for you, so that you have the newest version, okay?
All
But
right.
yes, you will all have them.
Jennifer, if I can just give you your flowers, I'll tell you.
Amen. Amen.
You know, I have, one of the things I've heard a ton was that you should invest in companies that you do shop in, like you just mentioned Walmart, right?
Yep.
And it says if you're going to shop there or make those purchases, you should invest there. But what you just did was elevated the game for me, because that makes sense. If I'm going to trade dollars with them, then I believe in them. And so invest in something that I believe in and that I trust and I frequent. But what you did was just elevated it, because letting the number, let the data, and taking the emotion out. Because what you just did for us is great, that if we shop at Walmart, we invest in Walmart, but is it the best spend for our money? So it's, you know, fine, you're going to patronize them, but where can my money grow best? And what's the wisest investment or wiser investment? You know, like you said, we may not be the next Warren Buffett or Juanita Buffett, but it's a smarter decision in what we're going to do. So thank you for that.
Absolutely. You're so welcome. You're so welcome. And I appreciate all you guys.
Renee,
Yes,
to your point.
The meeting, let me just say real quick, the April meeting is April 20th at 6 o'clock. Okay. It's a shorter meeting. It's only an hour, but it is April 20th. So it's always the third Wednesday of the month. Okay. I'm sorry.
No, I was just going to say, based on Renee's comment, Renee, one of the things you just elevated really was also that investing and understanding about stock, it may actually alter where we shop. So, you know, it may be on the back end, right? So maybe Walmart won't be the place where you start shopping once you understand how they are managing the dollars behind the scenes.
That's right. That's right. And look, I do believe, I mean, Renee, I do believe that, hey, if I am going to patronize you, I should be an owner of you as well. You know, I should have some ownership. So I don't want to negate that. But yeah, let's take the emotion out and let's see if our numbers can support it. Absolutely. So, all right, you all. Thank you so much.
Oh, Jennifer, I know you asked that we not look back at the stocks that we've already purchased. But one of the discussions that we had, and one of the reasons why my team did crypto adjacent, is because we're starting to look back, looking at how much, you know, we've been investing. You know, 200 across 6 months is quite a bit of money. So what is your suggestion, or how would you like for us to think about now increasing our position in the stocks that we already have? Because now we could possibly, I think some portfolios at this point are probably 10 or 20 deep, and that's a lot to keep track of. So what was your suggestion with that?
So I will say this, Joanne, for the purposes of this, this exercise, I just don't want you to make the same investment for this exercise, because I want you to look a little, you know, to take on the assignment. But we do still have teams that they have continued investing in what they started last year and then have just added on. So you have the flexibility to do both, and if you want, or to just say, hey, I'm just going to go with whatever the next assignment is and just leave it at that, because that's what you choose to do for whatever reason, you know, because it's too much to think about, you know, how deep the portfolio is and continuing that investment, you know. So about half of the your team, you know, the entire club has said, hey, I'm going to just set it and forget it, and I'm going just based on what the assignment is. And that's what we invest in, and that's what our dollars go in. And then about another half has said, hey, we're continuing to invest on a monthly basis in all the things we've already invested. Whatever you all choose to do, that is a personal decision. Our only commitment that, you know, the club has was that, hey, you invest $100 a month. in you, in those things that you end up picking, and you choose how that is spent. But now that was just the minimum. And so some of our sisters have said, hey, I can do more, and I want to do more for me. So it's whatever you decide to have it be, Joanne. I hope that answered the question.
Yeah, and this is Iretta. And so I have another off-topic, I guess, kind of question.
Okay.
Will we have a chance to have you explain to us a little bit about using the platforms and portfolios that we have? So when I look at my stuff, it says that this amount is unrealized as opposed to realized. And I'm at a little bit of a quandary as to what those technical or practical things mean as well. And I would appreciate some information around that as well.
That's good. That's good. That's something that we can actually cover in the April meeting. And that is actually really, really good, just in thinking about the, what does that actually mean? Because I sometimes take that for granted. So I'm going to make a note right now to make sure we cover that. Iretta, so thank you so much.
Awesome, thank you.
Sure. All right, ladies, I want to be cognizant of the time. We're just 3 minutes out. So again, thank you so much for joining me this evening. I so appreciate it. I'm always available if you guys want to send me an email, if you need to text me to clarify anything. But that's it. Have a good night. See ya. And remember, stable stocks. Let's keep the emotion out of it.